Hello everyone, welcome back to episode 3.2, Sheikh Trades here. And before we get into the video, I want to thank each and every one of you once again for watching episode 3.1. There's so much value in there and I'm happy that you guys liked it. Please, before we get into it, show me the likes, write some comments down. If you have any questions about the previous episodes or whatever, I really appreciate it, would help a lot. And as we said in episode 3.1, episode 3.2 will be singularly about entry, exit, and re-add. I'll go over on which cases I use half-size positions or full-size positions, in which cases I add a feeler position, in which cases I have my exit strategy, so when the trade works in my favor, in what certain scenarios and in which context do I exit my trades, because that's also systematically done. I don't just do it based on feeling or thinking. And how I recycle shares. So if I'm in a position, as you can see from that picture, that if I'm in a trade and let's say I caught this FBD 1 minute bar, it goes up and I'm only in with a small size or I'm in with full size and I take some off here, or as it goes up, I take some off, comes back down, and then I re-add more on those yellow lines. So one thing is that we're going to go over how I do that, how I build into my positions. For instance, if I was building into my position in that first yellow line, that first entry, as it's doing the FBD, I could have added, let's say, 2 contracts. Even if this rolls over, my loss is very limited. I'm only in with 30% of my size. And if this goes down 20 points, then I take a $60, $80 loss. But let's say I add 2 contracts. And as it does the 1 minute bar break, I add another 2 contracts. And then it goes. I add another 2 contracts as I get the confirmation, holds EMAs, does the 1 minute bar break again. And then it goes. And I'm in with 6 contracts with a good average of around here. And I'll be already up 30, 40 points, which would be 4 or 5 times the amount that I would have risked initially if the trade didn't work in my favor. And that's the beauty of being able to optimize your returns in the long run, by being able to resize your shares, by being able to have good exit strategies, good entry strategies. And today, along with the examples I have ready, real life examples, real chart examples, we're going to go over them. And I hope that this will be also a bit of value for you guys. Sorry, got a bit of a dry throat. But yeah, so entry, exit, and react strategy. Understanding precision execution in day trading. So how I'm able to be so precise in my day trading. I'll go over entry strategies, exit strategies, and when to react. Make sure to watch your previous bootcamp episodes, else some parts might be a bit confusing. As I said in episode 3.1, I'll be explaining all the concepts that I used once, and I went into detail. So now I'll be using them in abbreviation forms, and as I'm talking about it, so as I talk about an FBD here, I'm not going to go over what an FBD is again, because I already did that in episode 3.1. But yeah, let's get into it. Please leave a like before we start, and I hope you enjoy it. Precision entry models, the FBD FBO progression. FBD and FBO, what is the trigger? The trigger is the FBO FBD itself. The execution is adding a starter position, as we had here. Remember this picture. That's the trigger. Then the second step, the bar break. As you can see here, it does the bar break, where we add more size. The refresh and bar break. So the trigger is that it refreshes, does a bar break, and then we enter the full size, as shown in this example, as I gave a couple of minutes ago. We only add more size as the trade is working in our favor. We don't do that as it's going down. We never average down when we're in a loser. You never add to your loser. A lot of people, a lot of beginner traders tend to do that because they're trying to save their trade. They're trying to hope. There is no hope in this game. Don't save your trade by keep on adding and adding and adding and adding into a way uncomfortable position that you can't even manage anymore, where you're letting your emotions take over, where you're now gambling instead of having a fixed set of rules, fixed set of framework, fixed set of mechanical system. So, as I said, we have 2 things that I use. There are 2 things. The first thing that we have is, when do I trade half size? The second thing that we have is, when do I trade full size? So I'll read them first out and then I'll show you some examples on TradingView. So in candle pattern entries, in strong bias conditions where I already know that this trade will work instantly, that's when we're talking about backsides, rollovers, certain FBD, FBO high time frame setups. We know in strong bias conditions that we do not want to wait for the full progression. We do not want to wait for the full laying out of the trade, working out of this trade. We already know that this trade is going to work, so I already want to be in with full size. We utilize single candle confirmation for exact tops or bottoms. What could those single pattern confirmations be, or those concepts be? They could be inverse hammers. They could be hammers itself. They could be bar breaks. They could be the other concept that I explained in episode 3.1. The context of that is that we're confident in the level holding. We know that this backside trade is going to roll over. We know that this pullback, this refresh, or this momentum continuation is going to work. So we add already in full size instead of chasing the trade higher. However, in certain cases, which I'm going to show in a bit, I have times that I add half size, and I call that feeler position. I give myself a feeler position. So let's say usually I have a 6 micro contract full size. That's how I trade, and it could be something that I only add 2 contracts into my trade. So let's say whether it does a bump into a certain key level, like the VWAP, like pre-market high, like yesterday's close, like yesterday's VWAP, and I'm already trading the front side. And remember, episode 3.1, I already spoke about front side and back side. So I'm already trading the front side. And usually I don't do that, but it's okay to add a feeler size to your front side so you're already exposed to the trade, that in case that it does roll over and it does work out, that you add more on the confirmation that we went over, whether it's an FBD, FBO, bar break, whether it's a refresh. You add more based on the concept that I've taught in episode 3.1. And what do I mean with intuitive executions? Not every setup offers a pristine model. The market doesn't owe you anything. So it doesn't instantly, the moment you take a trade, that it works in your favor. It doesn't work that way. Market reading. If the market moves in your favor but hasn't given an entry model, don't be scared to add starters. Only if it aligns with your higher time frame analysis. So you already know you want longs and the market is just being a bit choppy. It's okay to add some size into that trade already to be exposed to those longs. So in case that this does rip up, you still are exposed to that longs and you could add comfortably to your position knowing that you're already up unrealized. Urgency. If the move is violent and valid, speed of execution takes priority over model perfection. You need to be fast in trading. Yes, we wait for backside moves. Yes, we wait for the trade to happen, but we also need to be rapid. We need to be fast. We don't want to be left behind. We don't want to start chasing price. And a good example of that could be, let's see. Trade that I did take. I remember this trade. Perfect. So an example of that is when we had the 25th of November. That's yesterday's VWAP. And once again, why is it not selecting? Yeah. So we have yesterday's VWAP. And what do you know from yesterday's VWAP? There are a couple of things we know from yesterday's VWAP. One, this yesterday's VWAP is a key level for my trading. It's a key level. I rely heavily on it. And we got a massive push down. So I was like, okay, we're overextended. And I remember I took a long onto this. So I was seeing this candle at 946 hold. I saw the 1 minute bar break. I added 2 contracts. And then I sold the 2 contracts. I took a 15-point L. I was already in with 30%, but I'm okay with it. What happens then? The backside comes. We go back down. And as it's going back down, we reclaim. I re-added 2 contracts. I added more as we come back into that same level that I had marked, my yesterday's VWAP. I added some more again. I'm already in with 4. And I remember that I got the pullback, added more on the EMA break, and I was able to catch a full-size trade, being in with an average of 690s, and I was able to get out with an average of 780s, which was a gorgeous 60, 70-point trade. And this is how I utilize my adding into my positions. And sometimes I also have recycling, which I'm going to go over in a bit. But you could see that I added based on my intuition, like even though I didn't get any specific confirmation that this would roll over and it would go back up, I added 2 contracts just to be exposed to the longs in case it did go hold here, go back all the way up, in case it did. And in this case, it didn't, and I took an L on it, but I was already exposed to it. So now I wasn't scared to take it because I'm only adding with 2 contracts. And that's a very important concept. Do not be scared to trust your intuition, but also don't just blindly take longs or shorts into every key level you see. Have a systematic approach to it. My systematic approach is that I don't always do that. I also have times where I've taken trades full size instantly. Let me see if I can find something. Let's see. Very good trade. Yeah, that example, 3 December. I took this short immediately full size. Usually, if I took some small size here, I would have added more on the rollover here, and then I would have been able to take this trade. But I was already confident that this would roll over, and unfortunately, I was only able to make like 25 points on it, and that the rest I'd break even. But this was a full size trade, and I didn't need to take it with a half size, like in this case that I showed you here. That's what I mean with when to full size and when to half size. And then you got the exit model and profit protection. So what are my exit strategies? So if I'm in a trade and the trade works in my favor and we're going up or down, or I'm in long or short and it's moving 20, 30, 40, 50 points in my favor, do you base your exit strategy on money? Where you're like, oh, I'm up $500, I'm up $600, do I get out? I think a lot of people do that, and that sets them up for failure. You should always have a strategy, an exit strategy. So when I enter a trade, I already know that if this or this or this or this happens, I'm out. And that's something I do very well. You could see that even in my trades, if you go back to episode 3.1, or if I go over the L's of risk management in the coming episode, you'll see that I have very good risk management. I have very good exit strategies that if this happens or that happens, I'm out. And one thing which a lot of people don't have is, see, another example here. I take my short here, I take some out as it reaches this key level, and then it fills this key level, and then I take more out as we reach another key level. So how do I do that? How do I decide that, okay, this is enough, this is where I'm going to be out? The first case scenario, overextensions. Trail aggressively. A dojo or hammer after a long run is an immediate exit signal. Mindset, I'm up a lot, I won't give it back. Protect your gains, the most important thing. So when there's an overextension, I'm in a trade, just like the one that I showed you a second ago. When I'm in a trade and the trade is already working heavily in my favor, don't be delusional thinking that the market will just continue going and going and going and going. Trail your stop loss. So one exit strategy that I have is trailing my stop loss. The second exit strategy that I have is the level reclaim and rejections. Price fills to hold or break a key level, whether it be EMA, VWAP, major support or resistance levels. So let's say we come back into a major support level when I'm short and I see it breaking it and reclaiming that support level, then I'm out. Then I don't need to be holding that trade. The same with the VWAP, the same with the EMA. And then you go the 3-minute bar. On the 3-minute, if I'm short or long and let's say it's moving nicely up or moving nicely down, the moment it does a 3-minute bar break where the 3-minute new candle breaks the previous 3-minute candle, then I'm out. That indicates for me that a trend change might come. FBD and FBO threats, the most that I use, you should already be familiarized with what an FBD and FBO is. And the threat of that is, let's say if I'm short, and let me also bring back the example. So let's say I'm short here. This is where I'm short, and market goes down, it pulls back, it goes down, and it reclaims this level. What did it do? Perfect example that I have right now here. It reclaims the EMA. What was the EMA? What do we have here? That's a level reclaim, EMA reclaim. That's done, I'm out. What does it also do? It goes down, up again. What did it do? What was this level? That was an FBD. It failed to break down those levels at 720. Those 720 levels, it failed to break it down. So what is that? That's a filled level reclaim. That's an FBD threat. So we're short and it goes down and is reclaiming that level. It's threatening us that this filled breakdown worked. Like this breakdown didn't work and it's a FBD. So now it's threatening us that it's going to go up. And as you can see, it did go up. So that's also an exit strategy. Another exit strategy, if I'm short, let's say, if I'm short here, goes down, goes up, chops, breaks VWAP. What is that? That's a VWAP reclaim. What do you have for a VWAP reclaim? Again, an exit strategy. So those are all strategies that I use, and I could probably also go over the 3-minute. Let's just randomly choose something. Very good example that I have right here. So let's say you're short right here. So it does a 3-minute bar. It breaks the VWAP, it breaks the EMAs, and it's about to break these levels at 25.050s. And you're short, it goes down. You see that it never breaks the 3-minute bar. Mind you, we're on the 3-minute chart. It never breaks the 3-minute bar, never breaks the 3-minute bar, never breaks the 3-minute bar, never breaks the 3-minute bar. Then we break the 3-minute bar. What does this show you? The 3-minute bar break. It shows you that we're done with this trend. And coincidentally, you could see we're done with this trend. And that's the same with the longs. Goes up, goes up, goes up. Never breaks the low, never breaks the low, never breaks the low, doesn't break 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 the low. And here it breaks the low. And this is an exit strategy for me. Matter of fact, this is also an exit strategy for me. It goes, reclaims view up, does a 3-minute bar break. But yes, it does continue, but you can see it's very short-lived. And this is what I use day to day. Those 4 concepts is what I use on a daily basis where I take my exit. But mind you, a critical rule. Exit model apply only once the trade has moved in your favor. If the trade immediately goes against you after your entry, do not look for an exit model. Stick to your original stop loss plan. Why did I add that to this? So a lot of people, what I had that I told over the past couple of months, let's say we went short here. The trade goes up and it goes up. They're like, yeah, but we broke EMA. This is way too soon for you to already have an exit plan. Your stop loss plan, your risk management plan, that's okay. Whether you're risking above EMA, whether you're risking above this 3-minute high, you don't have any reason to be already looking for an exit strategy to tell me, oh, but we already broke the EMA, so I'm going to go out. It doesn't work that way. The only way an exit strategy is valid, which I also call the profit-taking strategy, is when the trade already moved in your favor, as you can see here. Once the trade already moved in your favor, then you look for your exit strategy. Then you look for your profit-taking strategies, which could be trailing aggressively when the stock is overextended or the equities are overextended, or getting all out as it reclaims EMA, or getting all out as it does the 3-minute bar, or if it does an FBD thread, just like this. This is our lowest low. It reclaims that level, FBD thread, so now it did an FBD thread, so now we're out. So the only way this is applicable is when the trade has already moved in your favor. And then we're at recycling pullback continuations. How do I recycle? So we went over when I trade half size, where I start my feeler position. We went over when I add full size, where I immediately already have the conviction that this trade will work, so I add full size. We went over the exit strategies that I have, my profit-taking / exit strategy. So when the trade is working in my favor and the trade is already making me money, what plan do I have in place so that I'm able to have a good profit-taking plan? If this happens, then I do that. And you'll see that all my models, everything I do are if clauses, because I've programmed myself to be more like an algo. If this happened, then that. If it breaks the 3-minute bar, I'm out. If it reclaims EMA, I'm out. And that's what I call a systematic approach. So the last thing we're going to go over is the recycling. So I'm already in a trade, and as I'm in a trade, and I think showing you with the example. So let's say, for instance, I'm in this trade here, and then it does a FBO here. I'm in this trade here short, goes down. I take partials here, reclaims, I re-add here, and I'm, let's say, in with 6 contracts. And I take 3 out here. I add another 3, so I'm in with 6 again. And then it goes down, I take everything out. This is what I call recycling. So I'm in with 6, take 3 out. I still hold 3 from the original position. I re-add more size to come back to my original position of 6, and then I take everything out, or I trail everything out, doesn't matter. But that's what I call recycling. That's when you're still in holding your core position and you're adding back to that core position. And as the trade works in your favor, you're trailing out. And that's a perfect example of recycling. And a lot of professional traders in the equities world that I know have told me this. And that's the best way to maximize your returns and maximize your EV in the long run. Let's go over the slide, and then we're finally going to the examples. But the first pullback rule, mind you, I've said it in episode 3.1 again, I only trade the first pullback. So when a move happens, let's say this move happens, this whole move down. When this move happens, I better be in here or I better be in here. I will never, if this move already happened, I will never enter here, 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 or here. I will never do that. It's either I'm in when the move happens or I'm in at the first pullback, which is this here. I will not be trading this. I'll not be trading this. I'll not be trading this. I will be recycling my shares on them, but I will not be taking a full size trade on them. So I'm okay, as I showed you, that I'm here in here and I recycle shares here, but I'm not okay with taking my full size here and I'm recycling here. I only trade the first pullback. The second and third pullback, they're either for my exit or they're for recycling. Because as the trade goes down, the more legs we make, so 1, first pullback, down, second pullback, down, third pullback, down, fourth pullback, down, sixth pullback, and then after the sixth pullback, we're up. Every extra pullback we do, you're diminishing your EV, so we get a minus EV. We're diminishing EV. The probability of this trade going back up, the more legs we make down, is significantly higher with each newer leg made. So let's say we go down here, and the probability of this reclaim all the way back is 20%, because it's a very low chance that this reclaims all the way back up. The move just started. So here is 20%. The first pullback goes down. The chance now of this reclaiming back up to this level is 50%, because now the chance is a 50-50 that this reclaims. It already did a massive move down. The chance, and then the third pullback goes back down. The chance of this pullback, the third pullback going back up, is 75%. So you can see that every time it makes a new leg, the probability of it reversing gets higher and higher and higher up to the sixth pullback, where you could see we tried to roll over, we never rolled over, and we went back up, and we reversed all the way back up. And this is what I call the first pullback trade. So I only trade the first pullback, just like this. The first trade happens, this is the first pullback, and I'm completely okay with trading this, and then it goes back up, but I will never trade this. Never will I trade this. Even though this will work, I will never trade this, because this is only a good recycling place. So if I'm in here, I don't mind recycling here, but I will never trade this. Already overextended, and the chances of this giving us another leg higher, as you could see also, from here to here is around, let me calculate how much that is around a 2% move compared to this being 0.5% move. So the probability of this continuing and giving us a big range again is very low, because you could never expect that this continues making newer legs continue up. It just doesn't. Every newer leg we make, there is a certain chance that the probability exponentially increases by reversing. And show another example, because that's something that a lot of people do not do well at. I know a lot of people, let's say for this trade, I know a lot of people that they miss this trade. So they miss this trade. They miss having an entry here. They miss having an entry here. They miss having an entry here. They miss having an entry here below the VWAP. And then what do? They start chasing this. And then they're like, okay, this is where they have a entry. So they have an entry here. And then they're like, yeah, now we need it to roll. But they forget that if you look at the higher time, if you look at the context, we already did 1 leg, 2 leg, 3 leg, 4 legs, 5 legs. And as I said, the more legs we make, the higher the probability of it reversing. And then they want it to flush another leg down. It just doesn't happen. It's impossible. At a certain point, the more we go down, the higher the chance it reverses. So do not get caught in these. Have the patience. The market just doesn't keep on going up or down. That's a very key important concept. Let's put it that way. And let's go back to the slide. The first pullback rule, we target the first pullback and occasionally the second for re-ads. Never re-ad after the second pullback. As I said, I never trade the second pullback. I'm okay with taking partials on it or seeing what happens, but I will never be taking new trades on them. The move is likely overextended. The EV is negative. The expected value, the expectation of that trade working is already diminishing. Every new leg we make, the EV, the expected value of this trade working out, is negative. The probability of this trade working out is negative. The probability of it reversing on me is substantially high. The probability of it continuing for another leg for 100 points is very low. Do not get caught in those trades. It's okay to retry the same setup. That's also another key point. Retrying the same setup. And as I said, I'm going to show you examples. You will also see in my trades that I'm going to show you, I never trade the second, third, fourth pullback. I never do that. And you could see that I do retry the same setup. So for instance, because I have a very tight risk management, so one thing which I could already show, go to the 1 minute. One thing which I remember vividly was yesterday, live stream. I took a short here. Top ticked, stop loss hit. And then I retried it, and then I was able to make my money. It's okay to retry that setup. I was short, unfortunately got taken out, top ticked, retried it, worked out. And I was able to make money on the day during that period. So it's okay to take a retry. So once your first try fails and you're retrying it and your second try fails and you're retrying and your third try fails, that's where I call it quits. 3 L's and I'm done. 3 strikes on the same setup, I'm done. If after 3 times, and I've known that based on my journaling, that after 3 times a setup doesn't work, then I'm just wrong for the day, I'm completely off, and I call it the day. I don't need to keep on retrying short. I don't need to do that. It's one, I try it. If it works, it works. If it doesn't work, I'll retry it again because I have a tight risk management. I have tight risk. So it's okay that you only try it once. If you're shorting here and your risk is right around here, then high of day, then you know that if it comes back to high of day, you don't have any reason to retry it. But because my risk is tight, then I'm okay with retrying certain times. That's one way. If an other opportunity takes place after you just took if you just took an L a few minutes ago, you must take it again. There is no picking and choosing. If I'm short on this setup, then I better make sure that I take every time, every short that I see present itself on the chart, because it has to do with consistency. If I don't consistently retry, then my results will vary end of year. So if I don't, it's either I do it every day or I don't do it every day. I can't be taking this trade here, taking L here, and not retry it again, and tomorrow retry it again, and the day after the same thing happens where I take a 10 point, 20 point loss and I don't re-hit it, it eventually will eat into my profit and it will eventually eat into my RR. So whatever strategy you trade, you have to be consistent even with your Ls and even with your trade frequency and trade management and trade setups. Valid recycling structures. So just like my exit strategies or the profit strategy, that the profit taking strategy that I call, I also have recycling structures. And as I showed you what recycling is, that's where, for instance, if I'm long here, then I add more here and add more here and I take everything out here. Or if I'm, giving myself a feeder position, I take some here, I take some here, I take some here, and I take everything out. That's what I call recycling. I'm recycling shares. And another example that we had was that overextended short here. Recycling is adding here, and where you added with 6 contracts, you take partial for 3, you add another 3, and then you take everything out. That's the recycling structure. And how do I determine those recycling structures? Mini FBD and FBO. Look for mini FBD and FBO on lower time frames. And a perfect example is this one. Just perfect. So what did I do? I took a starter position here, did a mini FBD, went back up, did a 3-minute bar. I took some out, re-added more, and I took everything out. And that's what I call the recycling method. So I was recycling because of the FBD that came. That's one way to recycle your shares. Strong reclaim. If price monetarily fills a level but reclaims it with authority, it shows buyers or sellers are straight aggressive. The VWAP method, the VWAP example that I showed you. So let's say if we're in with 6 contracts here, short, take 3 out, come back down heavily, you can add 3 again. So you're back to 6 core position, and then you take everything out. You recycled back into your core position because it broke a key level, which was the VWAP. Tight consolidation, sign that the move still has strength. Very important. I could even show it with this example that I personally took a trade on. I was in with 6 contracts. I took 2 out here, took 2 out here, added 2 again, and then I added 3 again. Why did I do that? I saw how tight this was consolidating. It didn't go back down. If it came back down, I would have called quits on everything. It was in this tight range, broke out, and gave us another leg. During cases like that, a tight consolidation works as well. Also during an EMA reclaim. Bullish flags and bearish flags. Simple continuation patterns. Very easy. I think you should already be familiar with that. This is a bullish flag. Goes up. Breaks this level. Continues for another leg up. And a bearish flag is this. Goes down. Chops. And then goes back down again. So during cases like that, which I also call the distribution pattern, it's okay to be taking more size, to be taking and recycling your shares. So now that we went all over that, I'm going to load up some examples that I have ready for you guys of my own personal trades with my executions. So this way, I think a lot of you could be learning a bit better for the visual learners. 27 October, I had this gold trade. Let me see. what do you see here? I'm recycling my shares. You could see that I'm short here, which is here. You can see I'm short here. I take some out, I wait, and then I re-add some more here. And what is this? Tight consolidation. I saw this tight consolidation. You can see they're identical. It just, my journal only gives them separately. You could see I add 6 contracts. I take 2 out. I wait all the way. And as I was seeing that this was doing a tight consolidation, and I knew that it was going to go down more, I added more size. I added another 3. So I'm back to an original 5 contract position, 1 less than my original, and I took everything out. So I was able to maximize my EV on this, maximize my results and my profit on this trade. And that's because I got a tight consolidation and I was recycling my position. That's one example. Second example, 5th of November, I remember this trade. That was for the Tradify Grand Cup. And you could see, let me zoom in. What do you see? That's another thing what I meant with the retrying your setups. Let's go back to this. Let's go back to the, let me find it. Retrying the same setup. Let's go back to the slide. Retrying the same setup. If another opportunity takes place after you just took an L, you must take it again. I'm not going to because I have a tight risk, I'm not just going to let this eat me up and be considered an L. So I took longs, my starter position. I added a bit more, took half of my position out, took everything out. So this half of my position, everything out, which I'll go over in risk management, why I take half position out and then I take full out. It also increases your EV in the long run. But you can see that I'm long, add some more because it did an FBT and I thought, okay, this is going to go. And then take some out. So I'm flat here and I'm down on the day. I retry some as it reclaimed that same level. Bye. Doesn't give me the continuation, comes back down. I take a small L. And the moment I see buyer stepping up, bidder stepping up, I started adding my position. You could see I add the starter size. I add more. 1 minute bar break. I add more. And then I'm starting to recycle. I'm exiting. And you could see we roll over. I recycle my shares. And what did I say? In what case do we do that? We're very strong up. This is still the first pullback. I only trade the first pullback. And what do I do in the first pullback? I recycle my shares. I re-added some more and I took everything off. So I was able to get a huge trade compared to what I lost. Look what I lost and compared to what I made. Do you see that? It's just good that I'm able to show you like with my own execution and how I recycle my position. Another example. Let's go into the 19th of November. This is once again what I mean with retrying your positions. So you could see, let me pull them all up together. No, you're not going to work. Yes, there you go. There you go. What do these have in common? What do these trades have in common? Those are the executions for those trades. So you could see that on the NQ, I was short here. So I short here. It reclaims on me and I'm out. This is my normal risk management strategy. I go out break even. But what do? I don't sit on hands and be like, oh yeah, but I missed this trade. No, I re-hit it. So you could see I short, break even, and I re-hit it here. You could see I re-hit it here and take my money. So yes, this trade ended up as a break even trade, but then I hadn't make up $500, $600 on this. So you could see that I'm re-hitting this trade. I'm not letting that one single L take me out of that one single break even where I already tried the short, take me out of the equation. No, I'm still in there. I'm going to retry it because I have a tight risk management. And being able to do that allows me to maximize EV in the long run. And that's what I mean with retrying the same setup. And you could see I only trade the first pullback. So this is the first pullback and I'm okay with re-adding back into that same first pullback. You don't see, I don't short here. I don't short this because the probability of it reversing is higher and the probability of me losing money is way higher than the probability of me making money. And as I explained already a couple of minutes ago, very logical. And then let's go to my other examples. 26th of November. Also another thing. You could see that on this position, I took an L on it. Very normal. I'm in full size. I thought the 1 minute bar break and then gonna go roll over. Didn't happen. Took my L around 25 points, 20 points. It is what it is. But I never gave up. It gave me another FBO, started again hitting it here, and took everything out. So I retried that same setup, but if I'd retried this and this didn't work, and I retried again and didn't work, I would have been done for the day. So be it. That's okay. It happens once in a while, and after 3 times, if it still doesn't work, yes, I might take it to RL on the day, but I'm okay. I make 30, 40, 50 R in a month. So me being able to re-hit this is giving a fight, giving myself a fair chance to still have a trade that works, because I have a tight risk management. A lot of people will short this and they will risk high of day, and then they're going to lose money, and they're going to be done with it for the day. But instead, what you could do instead of doing that, have a tighter risk, but retry those positions, retry those trades. It's okay that a trade doesn't work. The market doesn't owe you anything. Just because you're short here, the market doesn't have to dump for you. It's okay. Yeah, you have the right idea, but the wrong execution. Get out, have a small L, and then add a trade where you do make 4 times, 3 times of whatever you lost here. And you could see I add and I make literally 3 times as much as I've lost here. And that's the beauty about the way I trade. I have another example, 3rd of December. Let's remove this as well. 3rd of December. What do you see again? Very annoying. And I told you, this is literally yesterday that we traded it. And you could see that I had a bearish bias, and I took this trade because I had the conviction that this would work. And you could see I'm short here. I get top ticked out here. I retry it here, and I take partials here, and then the rest I get out break even. Because I'm retrying this trade. You know, it never gave me the chance to recycle. If this dumped heavily, broke pre-market lows, and came back down, and it gave an FBO setup or whatever, I would have retried, I would have recycled, so I would have taken partials, and then re-add more size, and then continue the next, hold for the next leg down. But it didn't happen. And so be it. It's very normal. Some days just be like that. And then we got the 28th October, and this is also a very good example on what the limitations are of the way I trade, which, you know, for full transparency, I have to tell you guys, some days you have trades like this. If it was any other people, they would have made massive money on it. And you could see I was L on this day. I was red on this day. It's a tiny red, but it sucks. I was short here. It went against me the first pullback, came back down, and I just exited everything. Top ticked exited. My risk was above this candle, and it got there, and I got taken out. But you could see I retried it right around here. So we break in this key level. I retried here, and it rolls over and comes back down. And what do you see? Yes, it works. But I was holding for a deeper fade, and you can see I'm again out break even. So instead of making money on 2 trades where I was dead right on and my execution was perfect to the T, I still wasn't able to manage this trade perfectly where I should have been able to make money. And I ended the day with a red day, which happens because I have a tight risk, but I don't care. You know, I'm down 0.3 R on that day, and the next day I might 5 or 6 R on it because I have such tight risk management. Because for instance, if this trade, yes, I lost, let's say $200 on this, but this trade, if it worked all the way down, it would have been 600, 700, $800. And I do this every day consistently. You know, I can't be retrying, like let's say I can't, if I didn't retry this setup when I took that L, then I couldn't have retried the other setups as well that I showed you where it did work out in my favor. Where, just like the example that I showed you on the 3rd of December, this example here that I took an L on it, you could see. Where is it? I can't find it anymore, but it should have been the 26th of November. Yeah. So you could see I took an L on it. If I didn't retry it, I wasn't able to catch this massive move down. I wouldn't be able to. And that's the same example with this. And the same example with this. Yes, I took an L, but I had to retry it. Yes, it was only a break-even trade, but it is what it is. This has made me money more times than I lost money or went break-even on it. So this is about it. Was able to show you guys some nice examples. Was able to show you guys some good ways of how I manage my trade, how I trade the first pullback, how I retry trades. So to conclude everything, I go back all the way to the beginning. Entry, exit, and react strategies. Entry strategies, you already know. It's a bar break. It's the FBD, FBO, the concept that we already explained in 3.1. Exit strategies, what I also call profit-taking strategies, is when a trade is already working in your favor, not sitting at your entry, working already in your favor. What things do? I trail my stop loss if it's already overextended. I use levels reclaims and rejection, where it reclaims VO up, reclaims EMA, or reclaims a key level or whatever, that I go out. The 3-minute bar, as I showed you guys, that if it goes down and it does a 3-minute bar break where the previous candle breaks the previous, where the current candle breaks the previous candle's high for a short, or the current candle breaks the previous candle's lows on the 3-minute for a long, then I'm out. And then the FBD and FBO threats. And that's what I showed you with, if you have a chart and you're short, let's say, as I showed you here. So I'm short here, it breaks down, reclaims, doesn't FBD through this level. That's where you call it quits. Same with here, you're short here, goes down, reclaims this level, reclaims EMA, or reclaims FBD, and then it goes all the way up. You already know you should be out if you're in short, and that's what an FBD threat is. And the same with an FBO threat. So let's say, what could be a good example? This could be a good example. You're long here, does a push at 1138, fills that breakout. You could see that's what I call an FBO threat. Fills that breakout and we roll over all the way, and that's an FBO threat. And then you got the recycling. So I already explained with the probability and EV what the first pullback is, why I only trade the first broker, why I do not continue looking for, let's say, in this example, if I'm short here, then I'm okay with being short here, and I'm okay being short at the first pullback, but not at the second, because every consecutive leg we make down, the probability of it reversing is exponentially increased. So the probability of it increasing here is super high, as you could see. And the same with this leg up. First pullback is okay. Second pullback, you could see we do a tiny pullback and we never continue higher, because every leg we make, the probability of it reversing is higher, and it diminishes EV. And I don't take trades where the EV is not in my favor, where the EV isn't high, the expected value of the trade isn't high. And then you have the recycling and retrying. So I showed you guys examples of how I retry setup. So if a setup, I take it, it doesn't work because I have a tight risk, I don't mind retrying it at a rollover or at another valid setup that it gives me. And how do I recycle? I look for mini FBD, FBOs, good recycling, bull flags, reclaims of levels, or tight consolidations. So this is it. And this was supposed to be a 20-minute video, but I'm here with 40 minutes of content, 30 minutes of value. I put a lot of time and effort into those videos, and I genuinely hope you guys like it. I genuinely hope you guys find value in them. Take the time to study them. This is going to make you a better trader. I don't have any doubt about that. But at the end of the day, you have to put in the work. I do this all for free. The only thing that I want is a like and perhaps a comment for it. And I'll catch you guys in the next episode. Bye-bye.